Guys, waiting day now. How are you guys doing today? Are you prepared for the directional bias? Una don't prepare. I can't see comment or waiting this up. I know they see comment oh. How far now? I don't dey see comment. Where una come dey before? Guys, see this now only 6 people we get for this place. And I don't talk about this thing before. Say I no like this thing wey be say class go start 12 p.m. You know they use Nigerian time for me. You go teach yourself oh. No dey use Nigerian time for me oh. You go teach yourself oh. If you come late to this class, you go later teach yourself if you dey come late to class. We start class at 12 p.m. You dey come after 30 seconds after 12. 30 seconds after 12. Why you dey come 30 seconds after 12? I came on this live 11:59 with 7 seconds. 7 seconds to 12. 7 seconds to 12. Now that time I come on live. Why you go dey come class 30 seconds after 12? Now people go dey join 12:01. Let's start with our directional bias. Make we leave people wey never join. Make we leave people wey never join. You go dey come 30 seconds after 12. No be me suppose come late. I no still come late. I dey punctual. Oh yeah now. Let me just start my directional bias. People wey no get the class, na dem sabi because I no go recap. If I recap, make I bend. Directional bias, right? Guys, directional. If I recap, make I bend. People wey come late to this class go come teach us wetin we learn today. Na dem go come teach us. Guys, okay. Directional bias simply means understanding the market direction. Directional bias simply means understanding the market direction. And what do I mean by the market direction? We know we have 3 ways the market move, right? No need to screen record. The video is going to record and it's going to be on my YouTube live video, so you don't need to screen record. So now let's talk about directional bias. Directional bias simply means understanding the direction of the market. And what do I mean by understanding the direction of the market? In this forex market, we have 3 ways the market move. We have either uptrend, or we have downtrend, and we have ranging, which is also sideways. We have 3 ways the market move, right? Directional bias. Now let me type it out. Directional bias simply means understanding the direction of the market. So directional bias simply means understanding the direction of the market. Guys, we all know that this directional bias, we have 3 ways the market move, right? The 3 ways the market move, which is either uptrend, downtrend, or ranging market. So in this directional bias, now let's talk about this directional bias. If we want to look for our directional bias, we look for our directional bias on the higher time frame. On the higher time frame. Should I type it out? We look for our directional bias on the higher time frame. Now let me just say directional bias time frame is 4 hour slash is 4 hour slash 1 day candle. Guys, we either do our directional bias on 4 hour or daily candle or daily time frame. So that is the time frame we use for our directional bias. We do our directional bias on 4-hour or daily time frame. So that is the time frame we do our directional bias. Guys, don't make mistake. We do directional bias on either 4-hour or daily time frame. And on that 4-hour, we need to understand what the market is currently doing. If the market is bullish, bearish, or trend, if the market is bullish, bearish, or consolidating, or going sideways. So that is what we need to do. We need to understand the directional bias, and we also use the higher time frame. So you need to understand the directional bias from the higher time frame. Now, in this directional bias, there are some key things we should look for when looking for our directional bias. We need to look for guys. Now you see these rules. You just see these rules I just typed out. We need to understand where the direction, where the market is coming from. No, let me just use price. No, I think price will be better than market. Let me just use price. Price. Oh, guys, in this directional bias, we need to understand three key things, right? From the higher time frame, and all these things is from the higher time frame. We need to understand where the market is going, the price is coming from. We need to understand where the price is currently at, because no matter what, if you want to analyze the market, the price will currently be at somewhere, right? The price will currently be at somewhere. And we need to also understand where the price is heading to, guys. And what do I mean by heading to? Something like this. For every higher low, for every higher high, now let's just say for every higher high, we have a new higher low. Then once you confirm this higher low, what are you expecting again? You are expecting a new higher high. So that's just how it is. And for every lower low, you are expecting a lower high. Then after this lower high has been confirmed, what are you expecting from the market? You are expecting another lower low. Then if this market complete this structure again, you are expecting a new lower high. Then after that, you are expecting a new lower low. So that is how the market works, and that is how you understand the direction of the market. So you need to understand where the price is coming from, where the price is currently at, where the price is heading to. So you need to understand that. And more confluence we add to our directional bias. Now let me give you confluence, key level confluence for our directional bias. So guys, now this is the confluence we add to our directional bias, right? This is the, could you make the letters more bold? Okay, no problem. Oh, The thing, I go try make am bold. Let me just read it out. Now, this is the key levels, the directional bias key levels. This is the directional bias key levels. Number one, we use our normal strategy, which is either structure, liquidity, point of interest. After that, another confluence, we had the support and resistance. Another confluence, we had the trend line. And everything all these key levels now, you need to look for them on your 4-hour or daily time frame. Now, all these confluence, you need to look for them on your daily time frame. And what do I mean by that? Looking for this confluence on daily time frame. Now, we are going to go to the chart and understand how directional bias works, right? And we are going to use the 4-hour time frame. We are going to use the 4-hour time frame. Now, for directional bias, guys, before you start with directional bias, you know there are some pairs. We all know that most of the time these pairs are always bullish. Pairs like gold, most of the time we all know that gold is bullish. So if we are a day trader, right, we cannot wait for days to take trade, or we just want to take our trade at that moment. Maybe 3 trades in a week. We want to take 3 trades in a week, maybe 2. Anything the market present us. And guys, you need to understand some things about time frame. I'm going to come back to that. Please remind me, don't make me forget this time frame of a thing. I need to discuss this time frame. So guys, you need to understand. Now, if you want to look for your directional bias, you start by shrinking your chart. Now, if I shrink my chart, what do you have here? Guys, what do you have here? If I shrink my chart, you can say I just shrink my chart now. What do you have here? What can you see? What can you see? Guys, what do you have here? You can see my chart. I shrink my chart. So what can you see on this chart now? Uptrend. Yeah, guys, you can see the market is trending up without even using the trend line. You can clearly see the market is trending up. Yes, you can clearly see the market is trending up. And in scenarios like this, what do we expect to do? In scenarios like this, if you are looking for a directional bias, now we understand that the market direction is uptrend, right? Now, what are we going to look for? We need to look for a way to join the buys. That's everything we care about. And this is your 4-hour time frame. We need to understand the market is bullish. Now the market is creating higher highs, higher lows. So what are we going to look for? We need to look for a way to join this trend. We need to look for a way to join this trend. And before that, now you are going to start with your confluence, which is the trend line. You are going to start with your trend line. And guys, pay attention to this trend line. Like I said, if you have read my trend line PDF, you will know that trend line is a very important tool in technical analysis, guys. Trend line is a very important tool in technical analysis. People joke with trend line, but you don't need to joke with trend line. It is very important for you to understand how to draw your trend line and how to connect your trend line. It is very important for you to understand. So I am going to draw out this trend line so everyone can see it. Okay, now let me start from there. 1. Now the market don't touch from the low. Then the market was able to touch at this point. 2. Then this one no really straight. We are going to use another trend line. But let me just mark this one out. So we are going to confluence these trend lines together. Now, since I have this one, now let me use from this recent low. This one doesn't align. Now let me use from the last 2 low. Which is this. Okay, now guys, we have 2 trend lines. We have 2 trend lines right now. one is from this low, and one is from these two lows. Like these two lows at this point, these two lows at this point. Now we are going to check these two lows, and confluence them together with our strategy. We are going to check these two lows and confluence them together with our strategy. Now, since we don't get this low now, and guys, let me tell you something. Let me tell you something about this trend line, is that you see this trend line, you don't need to use only trend line. You can also confluence trend line with other point of interest. You can also confluence trend line with other point of interest. And what do I mean by confluencing trend line with other point of interest? By confluencing trend line with maybe your order block, your breaker block, stuffs like that. Now let me give you an example. Of like charts like that, where you can confluence trend line with other confluence. Now we have a trending market at this point. Now this was the two lows. Now if you see something like this, once you draw out something like this, now let's say the market, this was the two lows we draw out from the market. We draw out from the market. You can also confluence it. With your order block, your breaker block, so on. So something like that. You don't need to use only trend line. Now let's take a look at this. Guys, you can see the moment market. Let me use something that is very clear. Let me look for the one that's very clear, Jerry, because question go much. Let me look for a clear one. Okay, I think this should be clear. Yeah, this should be clear. So people wey no understand trend line no go use question kill us. Yes, nice. Guys, you can see how perfect this trend line is. Guys, you can see how perfect this trend line is. No, now this market touched this trend line one, and it touched this one. Now you can see after the market touched this trend line, it touched this one. Now it makes this trend line valid. Now if you have marked out your trend line and the market was here, the market was at this place now, and you want to confluence this trend line with your other point of interest, now you should start by marking out your breaker blocks. You can start by marking out your breaker blocks, like aligning with that trend line. But in this scenario now, the market only buy from this trend line. In this scenario now, you can see the bounce back from only the trend line. The market was not able to touch this breaker block. And if it was going to touch this breaker block, go don move past like this. Go don dey come back at this point. Assuming this market was coming back at this point now, the market will be able to touch this breaker block and this trend line. But in this scenario, it was able to only bounce back from the trend line. It was able to only bounce back from the trend line. So this is, like you can see, this is an example of a trend line confluence. Now you can see the market touch this place. Then once you draw it out, then you wait for the market to get to that zone. Then the moment market get to that trend line, wait, you will always see a market structure shift at that trend line. You will always see a market structure shift at that zone, at that 4-hour point of interest or key level. Anyone you see from the market, you will always see a confirmation at that key level. Now I want to check this one I marked out. Now let's look at the confirmation. You will always see a confirmation at that key level. Now when the market, this is your 1 hour time frame. The moment market touch this trend line, this is where the market touch the trend line. Now what do you expect this market to do? You expect this market to keep selling. Now this market has rejected from this resistance level. Now this market has rejected from this level. What are you expecting the market to do? You expect the market to keep selling, right? Guys, you expect the market to keep selling. The moment market has touched this zone now, you expect the market to keep selling. Now let's take a look at what happened at this scenario. Let's take a look at what happened at this scenario. Now you expect the market to keep selling. You accept the market to keep selling, but the market was unable to break this low. Now pay attention to this. The market was unable to break this low on the trend line, on the trend line, on the trend line, on the trend line. The moment market bounced from the trend line now, the market was unable to break this low. The market was unable to break this low now. So, and market did what? The moment market was unable to break this low, it did what? It shifted structure. Now, where was the last high in this scenario? You can use this high, and you can also use this high. Now, the moment market shifts structure and closed above, what are you looking for? You are looking for your confirmation method to be able to take this trade, which is your reversal pattern. Which is your reversal pattern? Where is it? As I dey change time frame, this thing just dey reset. Now this is your 30 minutes. This is your 30 minutes. The moment market, this is your 45 minutes. The moment market was unable to create a new lower low, the moment market was unable to create a new lower low, now this market was rejecting from here. It was rejecting from this level, but it was unable to close with candle. That was why the market closed with this week. Now guys, you need to understand how candlestick works. This market was selling. Now don't pay attention to this high at this point. Now this market was initially selling. This market was initially selling at this point. This market was initially selling at this point, but the market, the buyers in this market are more than the sellers. You can see the market was unable to close with a candle, then it just rejected and turned to a bullish candle because it has broke the high that it opened with. I hope you guys are understanding me. It has broken the high that it opened with. So the next candle you are expecting, the moment market break this high now, you can see the candle that it closed with. Now let me show you. Guys, you need to go and you need to understand how your candlesticks works. You need to understand how your candlestick. This is where the closed and the open of the candle. So the moment market was unable to keep selling and the market starts closing above this candle now, this candle is going to change to bullish move. So where did the candle started from? It was from this place. The candle started from this place, then break this high and break this high, which is confirming our market structure shift. Now you have confirmed your market structure shift. The moment market break above this high and close above this high and this high, you are confirming your market structure shift. So if you are confirming your market structure shift, now if I can ask you, in this scenario now, where will be your, if you get your market structure shift at this point, if you get your market structure shift at this point, now where will be your take profit, your draw on liquidity? For every lower high, you should be expecting what? For every higher low, you should be expecting what? A new higher high. Now from this point, the market created this high and the market created this higher low. So what are you expecting next? What are you expecting next? You are expecting the market to create a new higher high. So in this point, and you are getting this directional bias from 4 hour, you will be able to buy till the market close above this high. You will be able to buy till the market close above that high. So everything you will be looking for till the market close above the high is your market structure shift or your double break of structure inducement point of interest. Now this is your 30 minutes, but you won't be able to see this thing clearly. You can just go on your chart and maybe reanalyze it. You can just, because this is 45 minutes. Let me just change it. This market they stress me if I don't change the time frame. Now the moment you confirm your market structure shift, what will you be looking for? Your double break of structure. Your double break of structure for your continuation pattern. Now let's look for our double break of structure together for our continuation pattern. Why this thing they vex me this morning? Why this thing they move this way? Guys, just wait. The thing is just loading. I don't know why this thing they behave this way this morning. Oh, please, can you analyze with 4 hour and use lower time frame? That's what I'm doing. So what am I doing now? I'm just waiting for the market to load. That's what I'm doing. That's what I'm doing. I want to show you guys confirmation. I show you guys the market structure shift on 45 minutes. Now let's look for more confirmation. The market no one load. I don't know why. I don't know why this market no one load now. We dey too early to upset me now. Look at where the market stopped. Look at where this market stopped. Wetin dey sup? Make I reload am. Where is the reload? Come on, guys, let me restart the app. Let me restart the app. See, the chart no load now. Shebi, I don restart the app. Okay, the chart don load back. Now let's check. Let's check. No, e go show now. E go show. Trust me, e go show. Yes, 30 minutes. Ha! Guys, oh! I no even see this thing before. Oh! I no even see am before, more. I won't be able to backtest to that way. I won't be able to backtest. And he pay me, and I want to show you guys. Like, let's just use the 45 minutes was showing, but we won't be able to see it clearly. Now, let me just show you the 45 minutes, right? Let me just show you the 45. I don't even see them at all. I just focus on everything I'm teaching. That's what I was looking at. I only focused on what I was teaching. Now you can see from this key level. Now this is your 45 minutes. Now everything you will be looking for at this point is your double break of structure. Now you need to understand how this double break of structure work. Anything you will be looking for, anything you are looking for is your double break of structure till the market create a new high. Now let's start from here. The moment market has started reacting from here, this market now break this high, pull back. You can see this pullback. If you check your 5 minutes, everything will be more clear. The moment market now, where is another one? The moment market break this high, you can see the inducement. Guys, you can see it won't be clear on 30 minutes, so don't ask me. Guys, it won't be clear. The moment market closed above this high and this high, you can see the inducement. You can see the market pull back to clear out this low before it continue buying. Now let's look for more. Or let me just look for the one that is more clear. Now the moment market break this high, now pay attention to this. The moment market break this high, breaking this high and this high, giving us this double break of structure with this candle. Where is your inducement? This is your inducement. Did the inducement mitigate the breaker block? No. Then you are going to mark out. You can see it here. You are going to mark it out like this. So guys, you can see, you will just keep buying. You will keep buying. So till the market get to that point, everything you are going to look for is buys. If you check your maybe 30-minute time frame, all this structure will be more clear to you. This is 45 minutes. Now, after market shifted structure, the market was bearish. What I would give you double break of structure. What are you looking for? The market clear this inducement and mitigate this breaker block. You can see the market clear this inducement and mitigate this breaker block. It started buying. So everything you will be looking for till the market clear this high will be buys. You can see So that is how this confluence work. That is how you align your trend line. And guys, you need to understand how to target your take profit. Understand how draw on liquidity works and understand how your trend line take profit works. So you need to understand that. Guys, so when I understand that this market was moving from a particular range and is heading to another range, so what will I be doing? I will just keep buying till the market get to that range. I will just keep buying till the market get to that range. For example, in a situation like this, you can see after the market has broken this structure, this is after the market has broken, this is your breaker block. Now confirm this thing again. After this push up, you confirm immediately without even scaling down to the lower time frame. This is your 4-hour time frame, right? The moment market break this high, you have your inducement and you have your point of interest, which is your other block. The moment so that is how the market works. That is how now the moment market break this structure, break this structure, break this structure, break this structure, you have your inducement at this point. This is 4-hour time frame. You will be able to see everything very clear. On maybe you'll be able to see this thing clear this thing clear on maybe 1 hour time frame, on 1 hour time frame, but you understand this thing is not getting to 1 hour because this thing don't pass. I just need you guys to understand all these things. So the same way market move on 30 minutes, the same way market move on 30 minutes, that is how it also move on 4-hour. Now market gave you a double break of structure, breaking this high and breaking this high. This is your inducement. This is your point of interest to buy. Now this market, now there was an unmitigated point of interest. This is your inducement. You can still buy from this point. You will just mark it out. This is your 4-hour. It's not a must for everything to be clear on 4 hours. So don't ask me wetin happen kiniko. No, it must not be clear. It must not be clear on 4 hour. This is your 4-hour time frame. You have to scale down to the lower time frame to confirm all these things. So that is how the market works. You can see that is how the same thing on 4-hour time frame. You can also go on your chart to check all these things out. So now let's do our normal directional bias for pairs. So guys, I hope you all understand what directional bias means. Do you understand? Guys, do you understand? Yes, that's a double break of structure. I was using 4-hour, right? I was using 4-hour. If you check your lower time frame, it should be more clear on lower time frame. Guys, also send the like on your screen. Also send the like on your screen. Also send the like on your screen. See, so the way we analyze on 30 minutes, structure, inducement, point of interest, also apply it on the higher time frame. But what is different between this time frame? Now, let me talk about this time frame is that the difference between this time frame is that if you are going to trade on 4-hour, it can take weeks, it can take months. But on 30 minutes, 1 hour, it can just take maybe 2 days, a day, for the market to trigger in. Now check how many days this market was able to return to this breaker block. The moment market break this structure, giving us this breaker block at this point, now check how many days market was able to return to this breaker block. This is your 4-hour. Check how many days market was able to return to this breaker block. So the way you trade on 30 minutes, it also works on 30 minutes, 15 minutes, and the time frame you use will depend on how many trades you are going to take. The time frame you use also depends on how many trades you are going to take in a day, or how many trades you are going to take in a week. So that is how directional bias work. And I hope you guys understand this directional bias, because without understanding this directional bias, this market, this structure go dey hard o. Now when market give us this double break of structure, we have our inducement. This is your 4-hour again. When market give us this double break of structure, we have our inducement. Did the inducement mitigate the breaker block? No. So which one is the valid point of interest to use? This breaker block. this breaker block at this point. So that is how you trade. The same thing that happened on 30 minutes also happened on 45 minutes. The same thing at this level. The moment market break this high, it gave you your inducement, and the market cleared this inducement. So that is how it works. You just need to understand this thing and pay attention to how the market works. So guys, that's how this directional bias work. The moment market break this, I give you your pullback, mitigate this breakout. This is your 4 hours. So the way you trade, but you know why we don't use 4 hours is because of of the time. The time before markets come back to your POI, it can take weeks, it can take days. So it depends. The main issues is if you are in like 4 hour structure. If you sketch to daily or weekly, you will see it. Internal structure explain. We are a day trader. I can't trade for weeks. I can't trade weekly time frame. Why? Before the market gets to the POI, how many weeks is it going to take me? How many months or how many years? I'm a day trader. I don't need the weekly time frame. I can just check the weekly time frame. Maybe it's reacting from a point of rejection. That is all. And before that market react from a point of rejection in weekly time frame, it is going to respect my 1 hour order block first. It is still going to respect my 1 hour order block. Yes, the art doesn't count. The art doesn't count. The like you have on your screen, just one like. Everybody can send only one like each. Or everybody can send only one like each. So everybody can send. That's what I'm saying. That's what I'm saying. So guys, that is how your directional bias works. And for this good, now what are we expecting from this market? What are we expecting from this market? Firstly, we are going to start by drawing out our trend line. Now I don't draw out my trend line, but the market is going to take a while to get to this point. Now if this trend line doesn't work, then you have to confluence. Then the moment you see that this trend line doesn't work, you have to confluence our normal strategy, because in some scenario the trend line won't be able to work. In some scenario the trend line won't be able to work, right? In some scenario, guys, the trend line won't be able to work. The market isn't going to respect the trend line. So that's why your technical analysis comes in. That's why you have to understand everything the market is doing. That's why you have to understand everything the market is doing. And when markets get to the point of reversal you marked out, when markets get to that point of reversal, you should see some sort of like market structure shift before you know that okay, this market is now bullish or this market is now bearish. Now I am going to use the last two low of this candle, which is this. Now what happened at if you pay attention to what happened at this last two low, now this market now has touched this trend line, touched this trend line, touched this trend line. Now I was expecting the market to break this trend line so the market can keep selling, but in what we see right now, the market is unable to break the trend line yet. It only closed with a wick, and the market mitigate the point of interest at this zone. So what do we see in situations like this? Guys, do you think the market is still going to reverse, or you think the market is going to buy? Now what do you think about this market scenario? Now since market is unable to close below this trend line and the wick has touched this zone to mitigate this breaker block, is this market going to start buying, or this market is still going to keep selling? But so guys, now let's check our 1 hour time frame. Let's check our 1 hour and see what we have there, on this 1 hour time frame, right? This market is now reacting from this level. It on Monday. If you check, okay, It's not even there on 1 hour. So it on Monday we are going to know what's going to happen at this point. It's on Monday. There are sometimes you won't be able to conclude on your directional bias. You just need to follow your trend. And in scenarios like that, it is better to stay off of the market. The moment you don't understand the direction of the market, what the market is going to do, it is better to stay off of the market, so you won't get now the this thing always say, now don't just judge by looking. I know what to do, right? Personally, I know what to do. But for newbies, now if you make mistake with this, then you will keep making mistake. How can you fix this problem? Just wait till the market open and see the reaction from that zone. Wait till market open and see the reaction from that zone. See the reaction from that zone. Don't take signals from anyone. Don't take signals from anyone. I don't do my directional bias. The market don't react from this trend line and don't react from this breaker. Now the market is here. I know what to do. But for you, go wait till Monday and journal everything that happened. Journal everything that happened. Journal everything that happened. You can see this trend now. You can see this trend and how it closed and where it reacted from. So you should also journal and understand what this market is going to do. Now let's move to our next pair. Now this is our next pair. Guys, we all understand what this market is doing, right? We all understand, and you can see in this scenario we are unable to use trend line. We are unable to use this trend line because this is the last low where I'm expecting the market to get to. Now guys, pay attention to the market structure at this point. The market says for every lower high, you are expecting a new lower low. So without saying nothing much, you guys should understand. Let me delete this. You guys should understand the situation of this market and where the market is heading to. It might break or buy. What is might? You know the market until the market break this low. Now this market no go rest. So don't think you are expecting a very long reversal before the market break. I don't think the market is going to give a very long reversal. So this is BTC USD. Now this is the trend line. Okay, from daily time frame. You can see we have to touch, but I know gold is BTC is going to break this thing before like rejecting too much because of the volatility. It is going to break below this low, and if market don't break below this low, I don't tell you guys this thing before. This is still my target. My target is around, I told you guys this thing before, around 73,000 or 74,000. Una no remember. I told you guys this thing before, so that I'm expecting my reversal to be around 74,000. Who remember when I was saying this thing, when I was telling you guys that I'm expecting my reversal to be around 74,000? So I don't tell una before. I don't tell una this thing on TikTok live. I don't tell una this thing on TikTok live. Okay. So guys, you can see it was just the directional bias. It was, yeah, thank God everybody remember. It was the directional bias from the higher time frame I did. If you even remember very well, we did our analysis, I guess, on weekly, right? You can see why I said it depends on the time frame you are using. It depends on the time frame you are using. We have all this unmitigated point of interest. This is where I'm expecting the market to get to, around 73,000. So thank God say una remember. This is the higher time frame I'm using. So when market gets here, we can know what this market is going to do. We can know what the market. We are not going to judge yet until the market get there. I don't tell you. For the accurate bias, use your higher time frame, which is your 4 hours. So guys, we know what to do on BTC. We need to just keep looking for sales. Let the market create a new lower high, then target your nearest drawn lower low. Let the market create a new lower high, target your nearest drawn lower low. You leave the weak and the body, na the same thing. Everything na the same thing. Sha no worry. No stress me, but boy. So guys, that's how for GPP JPY, we all understand what this market is doing. You can see on your daily time frame, the market is bullish, right? On your daily time frame, the market is bullish. You see something, I'm still like checking on this BTC, on this GPP JPY. The market is unable to close below this. Now guys, check this situation. Check this situation. This is your daily time frame. The market is unable to close below this support level. Check it. You can see the rejection from this support level. Now, will this rejection cause a new swing high? That's what we are still expecting. If I see the market situation has changed, then I can change my bias to buy, because I was expecting the market to still come back to this point, to this breaker block. But this market is rejecting from this zone. The market is rejecting from this zone. Look at how many days rejection. First rejection, day 1, day 2, day 3, day 4. 4 days rejection, 4 days rejection, 4 days rejection, which means their buyers are at that place. Their buyers are at this place now. Their buyers are at this place. Now the market is unable to break this support level. The market is unable to break this support level. The market is unable to break this support level. Guys, send the likes on your screen. You will see one like on your screen. Just like it. Send the one like on that screen. Now let's check our USD JPY. Oh, yes, you see these pairs, and they won't do like winch. You see these two pairs, but for my USD JPY, this is my bias. I am expecting the market to clear this trend line liquidity, right? I am expecting the market to clear this trend line liquidity, but the market is misbehaving. I am still expecting the market to clear this trend line liquidity. So far, this market is still bullish. We won't trade against the line, right? We won't trade against this bullish move until the market has hit a point of reversal. So even though we want to see our market structure shift at this point, the market structure shift must be complete. Even though the market wan shift structure, no be me go talk am, na the market go talk say e wan shift structure. That is why I am not changing my bias. You can see this market never shift structure. This is not your market structure shift. This market never shift structure. But this 4 hour, you can still see something, but no, the market should still pull back. Even though the market wants to change and start selling now, I am still not expecting sales at this point. I am not expecting sales at this point. On Monday sef, I will start looking for buys. I can look for buys on Monday. When market break this high, then I can look for buys on Monday. When market break this high, then I can look for buys on Monday. So when market break that high, then I can know, okay, the market is now bullish. Don't sell. I can know the market is now bullish until the market changes trend. I am not the one that's going to like change the market trend until the market change it. So I won't look for sales at all. So if in situations like this, when this market was here, you shouldn't be doing anything if you don't understand. Now I will just expect, like, I will just think the market is just creating a new lower high, higher low. Then what are we expecting next? Higher high. So if this market can break and I can confirm all the market structure shift at this point, this one now is not even if I can. If you pay attention to what happened here, you should be able to see some sort of market structure shift at this point. Now at this point, you should be able to see some at this point. The market is currently reacting from this order block, bullish order block. So that is why, and since market is reacting from this order block, I'm expecting the market to break this high. So no be me go change the trend of the market. Now the market go change in trend. You understand what I'm saying? Hello? So guys, that is it about this directional bias. And now I want you guys to go on your chart to go and check what this thing is doing. So you can understand the market situation. Guys, send the like on your screen. You will see a like on your screen. Guys, send the like. Guys, send the like on your screen. Guys, send the like on your screen. Send the like on your screen. You will see like. So guys, do you have any question about directional bias? Now let me take your question so I can just